all the demands on the financial system to mobilize capital rapidly and in other sectors like infrastructure, agriculture, MSMEs, exports, and the energy transition, requiring the banking sector to move from instrumental evaluation to systematic reinvention. With those words, and in keeping with the Indian tradition, the function will be inaugurated by lighting the auspicious Indian traditional lamp. And to do the honors, I request our chief guest, Sri Sanjay Malhotra, Governor RBI. I request Sri C.S. Shetty, Chairman IBA, Chairman SBI, along with Sri Atul Kumar Goyal, Chief Executive IBA, Sri Anand Goenka, President FICCI and Vice Chairman RPG Group, Sri Anand Swaroop, Secretary General FICCI, Madam Jyoti Vish, Director General FICCI, and Sri Ruchin Goyal, Managing Director and Senior Partner BCG, to kindly join in. Deepena lokana jayati, deepastejo mayaha smritaha, chaturvarga pradodipan, tasmat deep yajet priye. This couplet in Sanskrit translates, the lamp is luminous. Its radiance grants victory. Its light imparts dharma, artha, kama, and moksha, that is, righteousness, prosperity, pleasure, and finally, emancipation. This is the significance of lighting a lamp, and hence, a lamp should be lit. Lamp, as we know, is also a symbol of knowledge, learning, and wisdom. Let us come together for a group picture, please. Moments to be treasured in the form of photographs to be cherished for times to come. Thank you, and could I request all of you to kindly step on the dais and take your seats. Our chief guest, Sri Sanjay Malhotra, Governor RBI, Sri C.S. Shetty, Chairman IBA and Chairman State Bank of India, Sri Atul Kumar Goyal, Chief Executive IBA, Sri Anand Goenka, President FICCI and Vice Chairman RPG Group, Sri Anand Swaroop, Secretary General FICCI, Madam Jyoti Vish, Director General FICCI, and Sri Ruchin Goyal, MD and Senior Partner BCG. Ladies and gentlemen, this flagship conference has become a marquee event for the banking and financial sector, attracting participation from across India and globally. Over the years, it has positioned itself as a unique platform for knowledge dissemination and relationship building. Industry stalwarts and thought leaders will discuss key emerging issues, share success strategies, and lay out a roadmap for the future of the Indian banking industry. And now, as per tradition towards commitment, towards environment and sustainability, we will greet and welcome the chief guest with a green certificate. I request Sri Anand Goenka, President FICCI and Vice Chairman RPG Group, along with Sri C.S. Shetty, Chairman IBA and Chairman SBI, to please do the honors. Ladies and gentlemen, this green certificate honors Sri Sanjay Malhotra, Governor RBI, with a grove of 10 trees at the Trees for Tigers, Sundarbans National Park, West Bengal, India. Can we have a resounding round of applause? Yes. Thank you. I call upon Madam Jyoti Vish, Director General FICCI, for the welcome address. Ma'am.
Good morning, everyone. Honorable Governor of Reserve Bank of India, Sri Sanjay Malhotra ji, Mr. C.S. Shetty, Chairman, Indian Banks Association and Chairman, State Bank of India, Mr. Anand Goenka, President FICCI and Vice Chairman, RPG Group, Mr. Atul Kumar Goyal, Chief Executive, Indian Banks Association, Mr. Anand Swaroop, Secretary General FICCI, Mr. Ruchin Goel, Managing Director and Senior Partner, BCG, distinguished bankers, industry leaders, colleagues, ladies and gentlemen. Gives me a great pleasure to welcome you all to FIBAC 2026. For over 2 decades, this platform has become premier for the purposeful engagement of all the stakeholders who come together to deliberate on the issues that will shape the future of Indian banking. This year, we meet around a particularly relevant theme, which is winning in the AI era, the new playbook for Indian banks. Artificial intelligence, as we all know, is no longer a distant possibility or a standalone technology initiative. It is rapidly reshaping how banks assess credit, manage risk, detect fraud, serve customers, and build operational efficiency. For a country such as India, it also presents a very powerful opportunity to deepen financial inclusion, improve access of credit to the MSMEs, create more responsive financial services. At the same time, the promise of AI must be matched with a strong commitment to trust, governance, cybersecurity, responsible use of data, customer protection, and all of that. And the question, therefore, before us is not only how quickly we can adopt AI, but how effectively we can use it to create a more stronger, inclusive, and more trusted financial institutions. The agenda of the next 2 days will definitely reflect on the breadth of this ambition. We're especially honored, sir, to have you amidst us, the Honorable Governor Shri Sanjay Malhotra ji. Your presence and guidance is deeply valued by the banking industry, and at the same time, the global uncertainty and rapid technological change, the Reserve Bank's continued emphasis on the financial stability, resilience, innovation, customer trust provides an important anchor for the financial ecosystem. With these words, I will now like to invite Shri C.S. Shetty, Chairman IBA and Chairman State Bank, for his address to the gathering. Shri Shetty has been at the forefront of India's banking sector at a time of significant transformation. So his leadership and perspective on the evolving banking landscape will be of immense value to us. Over to you, sir, please.
Good morning, everyone. Sri Sanjay Malhotra ji, Governor, Reserve Bank of India. Sri Anand Goenka, President FICCI and Vice Chairman RPG Group. Sri Atul Kumar Goel, Chief Executive IBA. Esteemed leaders from banks, financial institutions, fintechs, and technology companies, senior office bearers of FICCI and the Indian Banks Association, distinguished panelists, ladies and gentlemen. It is my privilege to address the distinguished gathering at FIBAC 2026 at a time when the banking industry stands at one of the most defining moments in its history. In spite of a challenging global environment, India's banking sector continues to demonstrate remarkable strength and resilience. Stronger balance sheets, healthier asset quality, sound capital positions, and sustained profitability have enabled banks to support households, businesses, and the broader economy with confidence. This progress has been the result of the collective efforts of the banking industry, the government, and the regulators. The institutional framework that has been built over the years has given Indian banking the confidence to respond to changes while remaining anchored in stability and trust. Today, as the theme of FIBAC chosen to be what is the new playbook the banks will adopt in a new era of artificial intelligence? It's a timely one. I remember in the last PSB review with the governor, he specifically asked, what are you guys doing on the AI? Not only in terms of AI-related risk, he spoke more about the AI-related potential. That how do we transform the customer experience, employee productivity, and risk management. So that shows that every one of us are definitely thinking about adopting the AI in the financial services in general and banking in particular. So to that extent, I think the next major transformation confronting us is artificial intelligence. AI has the potential to influence virtually every part of economic activity. For banking, its possibilities are particularly profound because we sit at the intersection of people, businesses, information, and capital. Banks have already started using AI to understand customers better, improve surveys, strengthen risk management, and make credit processes more efficient. Much of the early momentum has understandably been in retail banking, where large volumes of data and transactions create immediate opportunities. But I believe the more consequential question for India is where we take AI next. India has set itself the ambition of becoming a developed economy by 2047. To support that ambition, the next wave of AI-led banking must take us deeper into the economy, to rural India, small businesses, and customers whose financial histories may not fit conventional models. Agriculture, in particular, presents a significant opportunity. AI can support better farm level decisions, while data driven risk assessment, digital records, and satellite imagery can help banks improve both credit access and portfolio management. As we speak, a lot of such adoption is happening at the farm lending. The challenge is to take these capabilities beyond pilots and make them affordable, practical, and accessible at the last mile. Indian banking, with its scale, reach, and institutional relationships, must help translate technological capability into economic opportunity. But as we pursue scale, we must also be clear about the responsibilities that come with it. Increased use of AI is introducing new vulnerabilities. More sophisticated technology can create even more sophisticated cyber threats. Fraud can evolve at a speed that conventional systems may struggle to match. Banks will therefore have to strengthen their defenses at the same time as they expand their use of AI. Banking is ultimately built on trust. I think this is a theme I think the governor has been talking, and we all as industry leaders have been talking about. The core of the banking is all about trust. Therefore, our approach to governance will also have to evolve. Increasingly, autonomous AI systems require us to think differently about oversight, model risk, transparency, and responsibility. The more consequential the decision, the greater must be our emphasis on explainability and human accountability. There is one other transformation that we must prepare for, that is within our own organizations. The banking workforce of the future will work very differently from the banking workforce of today. Our task is therefore to equip our people for this new AI-led environment. The real test of AI will not be how sophisticated our technology becomes, but what it enables us to accomplish. Whether it can support a small business to obtain timely credit, help a farmer manage risk and improve productivity, and make our financial system safer and more resilient. Most importantly, whether we can achieve all of this while preserving the confidence that people place in their banks. Going forward, AI will be more than the next chapter in the technology story of banking. It can become an important instrument in India's economic progress. And that, in my view, is what it truly means to win in the AI era. Thank you, and Jai Hind.
Thank you so much, sir, for your very insightful remarks and setting out the banking sector's perspective so clearly on this topic. May I now invite Mr. Anand Goenka, President FICCI and Vice Chairman RPG for his address. Mr. Goenka brings to this forum the perspective of Indian industry at a time when investment, innovation, resilience, and access to finance are becoming increasingly interconnected. We do look forward to your views, sir, on the role of banking sector in supporting India's next phase of growth.
Honorable Governor of the Reserve Bank of India, Shri Sanjay Malhotra ji, Mr. C.S. Shetty, Indian Banks Association and Chairman, State Bank of India, Mr. Atul Kumar Goel, Chief Executive, Indian Banks Association, Mr. Anand Swaroop, Ms. Jyoti Vij, Mr. Ruchin Goel. It's a privilege to welcome you at FIBAC 2026. At FIBAC last year, Governor Malhotra observed, at a time when balance sheets of banks and corporates are at their best, they should come together and drive the animal spirits to create an investment cycle. That call provides a fitting starting point for this year's theme, Winning in the AI Era, the new playbook for Indian banks. India's financial system is strong, and AI offers banks powerful new tools to finance growth, widen inclusion, and manage risk. I'd highlight 4 messages. First, India enters this transition from a position of strength. Despite global uncertainty, growth remains robust, inflation broadly under control, and the financial system stable. Strong balance sheets, healthy capital and liquidity, improved asset quality, and sustained profitability have reinforced confidence. The RBI's balanced focus on price stability, financial resilience, and orderly markets has provided valuable predictability through supply disruptions, geopolitical tensions, and market volatility. Second, the next frontier is to expand the boundaries of bankability. Many MSMEs and first-generation entrepreneurs have viable businesses and strong ambitions, but lack conventional collateral or established credit histories. Innovative structures, cash flow-based lending, and alternative data can help convert this potential into investments, jobs, and growth. Third, resilience must accompany growth. Businesses face disrupted supply chains, volatile commodity and energy prices, currency movements, and technological vulnerabilities. Banks can help them diversify markets, secure supply chains, and compete globally, supported by sound risk management, cybersecurity, and financial discipline. And fourth, AI must strengthen capability and trust. AI can transform underwriting, fraud detection, compliance, collections, and customer service. Its adoption must remain responsible with explainability, data protection, governance, human oversight, and robust controls at its core. Technology can support decisions, but institutional responsibility must remain paramount. FIBAC's agenda over the next 2 days reflects these priorities, covering MSME finance, agentic AI, AI-enabled credit, responsible adoption, and workforce transformation. For industry, the new playbook can be captured in 4 words. Partnership to build trust during times of fractured relationships. Prudence to preserve stability through uncertainty. Innovation to create distinctive capabilities and global competitive advantage. And inclusion to expand opportunity for MSMEs and emerging entrepreneurs. FICCI remains committed to advancing this shared agenda with IBA. I wish all participants an engaging and productive FIBAC 2026. Thank you.
Thank you, Mr. Goenka, for articulating the aspirations and expectations of industry from the banking sector. Ladies and gentlemen, we will now proceed to the release of 2 important FIBAC 2026 publications. The first is the FIBAC 2026 report, Winning in the AI Era, the new playbook for Indian banks prepared by FICCI, IBA, and the Boston Consulting Group. And the second is the FIBAC 2026 Compendium of Articles, which brings together the perspectives of distinguished banking leaders on how India's financial sector can harness artificial intelligence responsibly, inclusively, and at scale. I request Governor RBI, our Chief Guest, Shri Sanjay Malhotra ji, to kindly release both the reports. Ladies and gentlemen, the FIBAC 2026 report examines how Indian banks can translate their current strengths into sustained growth in the AI era. Whereas the FIBAC 2026 Compendium of Articles captures the collective voice of leaders from across the banking ecosystem. A group picture which will stay with us for times to come. Thank you for doing us the honors. And now to take us through the central findings and strategic messages emerging from the FIBAC 2026 report, we have Mr. Ruchin Goel, Managing Director and Senior Partner, Boston Consulting Group, for the theme presentation.
Respected dignitaries on the stage, leaders of India's financial services, colleagues, friends from the media, a very warm welcome to all of you. It is a privilege for BCG to be a knowledge partner to FIBAC once again, and to be able to share the key themes of 2026 report. Let me start with an uncomfortable truth. 2026 is not an easy year to be running a bank. Our report starts by 4 key forces that are literally shaping the tectonic plates of the global GDP and the global economic order. Geopolitical decoupling is at its highest level. Cyber attacks have now become industrialized and are happening at a pace 17 times faster than the past. Changes in climate and technology are morphing into what we call as polycrisis. And in the middle of all of this is the rise of AI. Any one of these forces would have been enough to occupy a full day strategy offsite. But banks have to deal with all 4 of these simultaneously while also growing at scale. It's not an easy task to be a bank CEO. The good news is that the banks globally have been able to navigate these crises actually quite well, and the banking sector globally is turning a corner. So we have taken 2 metrics to illustrate this point. One is price to book, the other is returns on equity over and above the cost of capital. And the Indian banking sector actually is turning the corner faster and better than any system around the world. The price to book of the entire Indian banking industry today, 90% of India's equity, banking equity, trades at a price to book more than 1, which is significantly higher than what it was 4 years back. And Indian banking industry is able to generate a return on equity more than 3% over and above its cost of capital. If you compare that to near zero in US and China and almost negative in Europe and several other markets. Indian banking sector is one of the best performing on this metric globally. The landscape of India's banking is also evolving to the favor of the entire industry. PSU banks down from 20 to 12, collectively making a profit of more than 2 lakh crores from a loss about a decade back. Indian private banks have finally become Indian owned also today, with the ownership of the Indian banks increasing more than 50%. We see several large foreign banks taking long-term strategic bets on the Indian market, and Indian banks also buying out the books of several foreign banks and all the other way around. Clearly, the Indian banking industry is moving from defense about 10 years back to now offense. However, one of the key tensions which is central to our report is the fact that India's overall banking credit is only 0.9 times that of our GDP. And this metric has remained largely constant over the last 1 decade. If we compare to similar markets, which are bank-led, like Europe, this number is 2 times. In China, it's 3 times. And if I take the decade between 2015 and 25, the banking sector was growing barely in line with our nominal GDP growth. However, the tide is turning now. In the financial year 26, the banking sector credit started growing 3.5 percentage points higher than the nominal GDP growth. And I must acknowledge all the work, the good work that is being done by the government, the regulator, that this credit growth that we are seeing is quite broad-based. It's not specific to one sector. We are seeing growth in retail, MSME, corporate, and also in agri. However, to be able to realize the ambitions of Viksit Bharat, we need to do this for next 20 years, year on year on year. An enormous task indeed for the entire sector. Banking is also evolving. For the past many years, banks have been focused on digitization. Digitization basically meant coding the known. It was useful, but not enough. And now banks enter into 2 new eras simultaneously. One, agentic bots that can do work that humans used to do. These bots can just follow intent and not hard codes and start doing work that was being once done by human beings. Today, agentic bots are running contact center. A document AI can actually run and manage an end-to-end credit process for SME. At the same time, human beings that are central to relationships and to judgment can make faster and more precise decisions using AI alongside with them. So we could have a relationship manager with the insights of an AI on tap, or a credit manager, having the insights of AI to be able to make better decisions. The form factor of banking is also evolving. We used to do banking with physical form factor of branches, which moved to apps. And now we are moving into a conversational era where people can talk in their natural language. It could be Hindi, Tamil, Marathi. And the AI bots can listen and understand the intent of what customers want and offer advice and make banking transactions which are truly personalized. Now, this is not something that will happen 5 years hence. It's already happening today at several institutions that are represented, in the forum as we speak in this room. Our report highlights 3 key imperatives that are important to win in the AI era. The first one, we call it the democratization of credit. Now, what's happened in the Indian banking system is that access to credit has truly become universal. We first had almost every adult human being have a bank account. We also now have most of the adult population, almost 80% of the adult population have a bureau footprint. And the access to credit has grown almost 1.7 times over the last 5 years. However, if you look at the bottom of the pyramid, the cost of credit still remains high. And that is not because the credit cost for the segment is high, it is because of the operating costs. Operating costs can be completely reimagined using AI if banks reimagine the entire underwriting process, the collections process, and the operations of running a bank. The second one is to really unlock true productivity. What we have seen is that over the last 1 decade, despite massive efforts by banks on digitization, the cost-income ratio is actually quite sticky at around 49% for the entire industry. Now, with AI, banks have the opportunity to completely reimagine their processes, not just digitize them, but also use intelligence and challenge the sticky cost-income ratio so that the entire economy can benefit. And finally, the risk paradigm has changed quite dramatically. It's now no longer credit risk, but it's about frauds, it's about operations resilience, it's about cyber attacks, it's about model risk. Indian banks are facing cyber attacks that are almost 1.5 times that of their global peers. AI, creates more vulnerability, but if used well, can also be the best defense against these attacks. Our report then finally concludes with a 13-point agenda across banks. the government and the regulator. The task is enormous, and no one institution can do this all alone. It will require a collective effort from everyone, banks, reimagining their processes fundamentally and not tinkering on the edges. The regulators, allowing banks to create sandboxes, but also having AI governance that keeps pace with the change in technology and not lagging it. And finally, government that can create the AI infrastructure, the compute power, the data centers, that will be required by the entire industry. Ladies and gentlemen, as we enter into this new era, the India's banking sector enters this with a position of strength. Rabindranath Tagore wrote that you can't cross the sea merely by standing and staring at the water. India's banking sector has the balance sheet, has the returns, has the ambition to be able to cross the waters. What we do at this moment depends on the deliberations we do in the next 2 days and the next 2 days and the next 2 decades to decide how far we're able to move on this journey. Thank you.
Thank you, Ruchan, for that excellent and in-depth presentation as always, and for providing such a compelling frame for the deliberations that are going to take place over the next 2 days. Ladies and gentlemen, it's now my singular honor to invite our chief guest, Honorable Governor of Reserve Bank of India, Shri Sanjay Malhotra ji, for his inaugural address. Sir, the Reserve Bank's stewardship has been pivotal in preserving the macroeconomic and financial stability while enabling the modern, innovative, and inclusive financial system. And at a time of global uncertainty and rapid technological change, sir, your guidance on the way forward for the banking system is especially very, very important for us. And so, Honorable Governor, sir, may I now request you kindly for your inaugural address. And ladies and gentlemen, please welcome him with a round of applause. Thank you.
Distinguished dignitaries on the dais, Mr. Sethi, Mr. Anand Goenka, Mr. Goel, Mr. Ruchan, Anand Saroop, Ms. Jyoti, Vij, all the leaders, stalwarts of the banking industry, and others present over here, friends from technology, fintechs, policymakers, press, colleagues from the Reserve Bank of India. Good morning to all of you. It's indeed my pleasure to be here back at FIBAC 2026. It's an important conference that's held annually, brings together the banking and the industry to exchange ideas, innovate, think of innovative ideas, strengthen collaboration, etc., etc. I congratulate FICCI and both FICCI and IBA for organizing this event. I'm grateful to you for giving me this opportunity to share my thoughts. I must thank also my previous speakers for making my task easier, because most of what I had to say, I think they have already covered it. So the message, I'm very happy, is very, very clear. The road, the roadmap, is the direction is clear. I think the roadmap is what you need to, over these 2 days, chart out. It's very timely that this conference is being organized. This is actually, the future. This is the AI holds to this decade what the 2010s held, what digitalization held for the 2010s, what liberalization held for the 1990s. And so it's very, very timely and apt that we are doing this conference over here. I also like the use of the word, playbook, because it's not really, only one project or one procurement of technology that you do. It's totally a different way of organizing things, doing business, doing banking. And so, and it requires really, a total change in mindset. It's a shift in how we evaluate risk, serve customers, price capital, organize institutions. Happy to know many of the banks are already doing it. Some of you are considering doing it. The only question now before us is whether you shape the AI journey or you let it shape you by default. Before I turn to the topic of this theme of this conference, AI, let me reconnect with something I had shared at this very conference last year in 2025. I had spoken about 3 priorities. You would recall Mr. Sethi did refer to some of them. And I said that our regulation making is going to be guided by 3 or 4 major priorities. One, financial stability. The other, customer centricity. And then ease of doing business and reducing cost of intermediation. I'm very happy to note that over the last 1 year, we have made good progress, whether it is on strengthening financial stability. We have taken a number of measures, as you would all recall. We finalized the standardized approach for credit risk capital, the ECL framework, the prudential norms on project finance, related party transactions, dividends policy, guidelines on NOOP, among others. We are well on target to be implementing, we meaning all the banks, are well on target to implement the Basel III guidelines that are applicable to us from the beginning of the next financial year with a glide path that we have given. Even our regulatory framework has been further bolstered by the improvements that we have made on supervision. Similarly, on ease of doing business, too, we took a number of steps. The regulatory burden on the boards has been reduced, made it more principle-based, policy-based, and let the operational details to be handled by the management. We consolidated regulatory and supervisory instructions, streamlined the forms of business, strengthened Pravaha. All the applications from the regulated entities and the customers, or 203 odd of them, they are all automated and electronic. 99 with timelines, 99% of them, 99.9% of them are delivered within those timelines. We rationalized the current account and working capital norms. We reviewed norms relating to pricing of bulk deposits. This was an ask from the industry. And we also delegated certain foreign exchange related approvals to our authorized dealers. Similarly, on expanding bank credit, a number of measures were taken. Mention was made in the morning of acquisition finance, which was a request I was pleasantly reminded, which was brought up in this FIBAC conference. And similarly, we have taken other measures, including the rationalization of regulations relating to priority sector, project finance, alternative investment funds, which will all enhance credit flow to the deserving sectors. Similarly, on reducing cost of intermediation, and some of you referred, Richard mentioned it even in his presentation, few measures: removal of investment fluctuation reserve, revised norms on interest rate on deposits, rationalization of DICGC premium, LCR, and CRR. They shall all help reduce cost of intermediation. We will continue. This is still a work in progress. We will continue. We all need to, the banks as well as the regulator needs to continue to work on these areas. Certainly, in all these areas, I think AI has a big role to play. As has already been mentioned, we all know, why AI is transformational, is how, it is different. While, we have had many technological transformations. Previously, we had the steam engine, it multiplied muscle power, electricity multiplied energy, computers multiplied calculations, internet multiplied connectivity. But how this is different is that it actually multiplies intelligence. One had never thought that one can actually do it. Way back, when I joined college, for example, when I did computer science, and they said that, coding is, the most difficult of subjects that humans can actually do. And everyone, even now, people go for it. But now coding has become so, mundane and easy and routine because people have now moved on from there to intelligence. So this is, of course, a promise. This holds huge promise for us, but at the same time, there are also risks. We in India stand at a unique vantage point to leverage AI. We have the most advanced public digital infrastructure, whether it is Aadhaar, the UPI, DigiLocker, ONDC. We are trying to build and improve and expand the unified lending interface, the account aggregator. These are all public goods on top of which the private sector can build AI because it has the potential to do for financial judgment what UPI did for financial transactions. That is, make it instant, granular, and available to the last mile. AI, well deployed, can close existing gaps in financial inclusion faster than any preceding technological innovation. Deployed carelessly, it can at the same time entrench new forms of exclusion and instability at a pace that regulators and banks may struggle to keep up with. We in the Reserve Bank, we had set up a committee for responsible, and it has come up with a framework for responsible and ethical enablement of AI, which submitted its report last year, and it very clearly and very nicely puts forth this tension. Much has been mentioned about this tension, but I think even at the sake of repetition, it's important that I speak about it. First of all, as Mr. Sethi reminded me, I remain unambiguous, on AI, and the Reserve Bank sees it actually as a capability to be responsibly harnessed and not merely as a risk to be contained. There are many reasons why the Indian banks cannot afford to sit on the sidelines and watch. Beautiful quote given by you in the end. We all need to work. Things will not, happen on their own. Because AI is, and you gave reasons, listed out 3 reasons, why and how AI can help us. Let me expand on some of them. First, it changes the economics of credit delivery fundamentally. Traditional underwriting relies on financial history, precisely the data that is thin or absent for new to credit borrowers, for the gig workers, for those unserved sections of our society because they do not have formal books. AI models on alternative data, which we have a lot now, cash flows, GST filings, utility, payment bills, digital platforms, they can all extend the frontier of bankable India considerably. Secondly, AI allows banks to serve customers better. Customer centricity, focus, experience, customer delight is what everyone is now looking at. And this has the scope to enable it, provided, as again mentioned by some of you, it is used to augment rather than merely to replace human judgment. A relationship manager assisted by an AI system that presents the right product, the right risk flag, can serve higher number of customers more efficiently. Similarly, AI-assisted grievance redressal, personalized financial guidance, they can enhance service quality to customers. Third, and perhaps most important for a country of our size, AI has the potential to be profoundly inclusive technology. The word used was democratize in your presentation. Voice interfaces in Indian languages, they can simplify banking by removing the language barrier, for instance. Fourth, again mention was made, operational efficiency. There is scope, some figures were given in the presentation, 47 to 49% of the operational costs, operational costs vis-a-vis income that needs to be reduced. And AI can certainly help us in this regard. Fifth, it is AI and AI alone that can beat AI-delivered frauds. Fraud today move at speeds of an API call. A rules-based fraud engine, however well designed, is perpetually one step behind the fraudsters who adapt more frequently. It is only AI and machine learning models which continuously learn from transaction patterns that can identify anomalies in real time rather than after the loss has centralized. Well, this list is only illustrative. We do not offer it as a mandate. Every bank's playbook has to be its own. It has to be shaped by its customer base, its risk appetite, and its capacity to govern, which is important, what it deploys. But I would urge all the banks present over here in the next 2 days and going forward to deliberate on where they stand in this journey of AI adoption and what is it that they can do to accelerate its adoption. You will obviously need to invest in technology, IT infrastructure, talent, skilling, reskilling. You'll have to forge sustainable partnerships because you may not be able to do all of it on your own. And you'll have to build the right governance structures. None of this will happen overnight, and none of this will happen by accident. It will require a deliberate, board-driven strategy backed by sustained investment and most importantly, a strong intent rather than a series of disconnected projects. Let me turn to the next half of the playbook, the tension, what brings the tension, and there are a number of risks which have been mentioned. I'll only briefly remark on them. One is the black box problem, the explainability issue, because everyone would like to know if his loan application is rejected, why it is rejected. The auditors would like to know, the customers would like to know, the regulators would like to know. And so this explainability is one risk that we need to take care of. The second risk is bias and exclusion. A model trained on historical lending data, if left unchecked, it will learn and perpetuate those biases. We need to be very careful about these risks. These biases could be related to geographies, certain occupations, certain communities. So we have to ensure that fairness in AI is not a compliance checkbox, it is a design requirement from day one. The third risk is concentration and herding. If a handful of financial models or a handful of technology vendors come to underpin credit and trading decisions across much of the banking system, an error or a bias can actually perpetuate throughout the banking system. The fourth risk, again very well known to you, is third-party risk, vendor dependence. While we do acknowledge, and I did mention that you will need to build partnerships because all banks, especially the small banks, may not be able to have their own large language models and AI. They'll have to depend on outside vendors, and this is perfectly understandable. But then we need to manage risks because governance cannot just stop at our outer walls. The fifth risk is data privacy and security. Compliance with the Digital Personal Data Protection Act is just the floor. We cannot remain satisfied just by complying with it. That should, in fact, we need to do much more. And the sixth risk is cyber and adversarial vulnerability. These AI themselves can attack you. There was a report, I think in July, one of the very leading AI firms over there, they used they gave the AI a prompt to check their systems. That was actually an offline system. I forget the name, and but it was able to collaborate over months, not over a few seconds or minutes or days. Over months, they were all these AI agents. They were able to collaborate and hack their own systems. You need to be very careful about it. And the seventh and the most important is, which is actually the underlying and the fundamental building block, is that there can be erosion of human judgment and accountability. No matter how sophisticated the model you may build, for a bank's decision, the ultimate responsibility has to lie with the bank and not with the vendor or with the algorithm. We cannot say that it is the model who decided it. That can never be an acceptable answer, whether to the bank, to the customer, or to the regulator. Meaningful human oversight, the ability to explain, to intervene, and where necessary, to override, must remain a design principle and not an afterthought. So what do we expect from all of you? We have already articulated it in our recommendations in the framework that we have laid out. It rests on a simple philosophy, which is that innovation and safety are not opposing goals. They are, in fact, complementary requirements of a durable financial system. We have deliberately chosen a principles-based, proportionate approach rather than a rigid and prescriptive one, because AI capability and risk will look very, very different for a large bank than for a small bank which is utilizing perhaps vendors off-the-shelf projects. That said, certain expectations will apply across the board. I'll urge all the institutions here to treat the following as immediate priorities rather than as distant compliances. One is to maintain a complete inventory. We should be knowing as to which are the models which are actually running in our bank. So please maintain a complete inventory of those models. Established a board-approved AI governance policy with clear accountability for outcomes and not merely for technology procurement. Build the capacity to explain AI-driven decisions that materially affect a customer, red team and stress test AI systems, and preserve meaningful human oversight at each and every point wherein AI's system error could cause material harm to a customer or have concerns for financial stability. We, in turn, are committed to engaging with the industry as this technology and its risks evolve through a willingness to learn alongside you rather than just legislate from a distance, and provide proportional, consultative, evidence-based, and agile regulation making and supervision. We also remain committed, and mention was made in the recommendations, of providing you a sandbox which has been there for some time now as a safe space for testing innovative use cases. We will continue to provide and further improve on common utilities that may be required for the banking industry as a whole, whether it is for things like fraud detection or prevention, like we have the Mule Hunter. We are now trying to put in place a digital payments intelligence platform. We'll continue to work alongside you to see as to how we can reap the benefits of AI while keeping the risks in mind. So let me conclude. We have much at stake. We need to further build on the very highly successful Jan Dhan Yojana. We have still a large underserved MSME credit market, which is estimated in tens of lakh of crore of rupees. A retail credit culture that is only now maturing. Customer service that can be vastly improved. Intermediation costs that can be further decreased. And digital frauds that need to be prevented and avoided. We need to leverage AI for this. The banks that will win in the AI era will not necessarily be the ones that adopt AI faster or the most. They will be the ones who adopt it with full understanding of what they are deploying, the clearest accountability for its outcomes, and Mr. Sethi mentioned about it, the strongest commitment to customers' trust that has always been and shall remain the true capital of Indian banking. The role of bank boards, the risk officers, the management, the technologists, and yes, of course, regulators like us is critical. We must all work together. We must work deliberately, and we must work with purpose and quickly. I look forward to this journey with you. I wish the conference much success. In the end, let me also wish all of you a very happy Independence Day in advance. Thank you. Jai Hind.
Thank you so much, sir, for your very inspiring and deeply insightful address. Your observations do provide a very clear sense of opportunities, the benefits before the banking system, the enabling framework that you are providing to enable some of these, as well as the responsibilities and the risks that come with them. So very grateful for your time, guidance, and continued engagement with the banking and the industry community, on all of these issues over the years. So I think, our Honorable Governor has agreed to take a few questions. So I think may I request Mr. Vijay Shankar, our Senior Vice President, FICCI, for his question.
So thank you again for a wonderful address. So the latest financial stability report highlights the resilience of the Indian banking system in the face of global uncertainty, market volatility, and also cyber risks, and also the interconnectedness of the financial system. Sir, in your view, as you look ahead, what do you consider to be the most significant risks facing the Indian financial system over the next few years in the medium term, sir?
I think Ruchin's presentation also, I think, brought out some of the challenges and risks. I think there are quite a few challenges. Public debt levels in advanced economies are high. There is growing interconnectedness of NBFCs and the unregulated space outside, not so much in India. Equity valuations are, again, please keep sitting. Equity valuations are elevated. And if there are corrections, all of these could have spillover effects. But I think if you were to ask me two important risks, I think Ruchin was quite spot on. One is uncertainties. I'll put it a little differently, though. One is, geopolitical uncertainties which we are facing, and it's not only the West Asia crisis, but a lot of other uncertainties, including trade tariff-related uncertainties. This is one, and the other is cyber risk. So because of interconnectedness, I think these two risks. But I must mention that the Indian economy and the Indian banking sector is very well positioned to meet these risks, meet these challenges. As mentioned, the banking sector is very robust, strong, CRAR of, I think, 17-18%. GNPA is less than 2%, and NPA is less than 0.5%. Healthy liquidity coverage ratios, good profitability, price to book also, increasing as was shown. The macroeconomic fundamentals of the Indian economy, again, are very strong. And some of you mentioned about, I think Anand mentioned in his remarks of how, the growth has been so resilient. Inflation is more or less under check, and all balance sheets are looking good. The external sector too is quite robust. We have good forex reserves, and I would say every kind of shock government and all stakeholders have actually taken this as an opportunity, whether it was the Ukraine crisis or the COVID. I mean, what is amazing and what is important to keep in mind is that every crisis, we not only meet them, but we come out of it much stronger. So while this shock may temper our growth for the short run, I think it's very good, for the long term, because of the various measures that now the government and other stakeholders are taking. You look at measures, for example, taken for diversification of our supply chains for energy, for fertilizers, and other critical elements. Look at how we are trying to reduce our energy intensity, use of ethanol, blending, EVs. So all of them give me the confidence that, even on the external sector, for example, the number of FTAs that the government has signed, so that will again, strengthen number of measures for capital flows that the government has taken. So all these, I think, all these things bode very well for our Indian economy going forward to meet these risks and challenges.
Thank you, sir. May I request Ms. Kidwai first? I'll come to
Sir, since assuming office, you have shown a desire to ensure that the banking sector supports India's aspiration for a Viksit Bharat, encouraging foreign investment through the Japanese banks, the Middle Eastern banks, and coming into India. My question for you is, you have emphasized the role of innovation and the AI potential to make banking, in your words, instant, granular, and available, while preserving financial stability, of course. What, as we look ahead, can we expect in terms of your broader vision for the next generation of banking reforms, the playbook you envisage?
I think the playbook remains the same. I mentioned in my remarks, and I mentioned last year in 2025, that the fundamental is financial stability. We need to continue to work on financial stability, because that is really, the bedrock. You cannot have growth without financial stability. So this is, the precondition. So we need to continuously strengthen it. We need to enhance. These were the priorities I had set out for ourselves last year: enhance ease of doing business. And I made mention of some of the things that we did. We need to improve customer service. That is the bedrock. I think you're all the bankers present over here. It is ultimately the customers. and how well they can serve them, how well they can hold them, get them in their fold, and improve services for them. That will continue to remain the underlying theme. Financial inclusion is again, a priority for us. And the fifth one, I mentioned it, while, we improve quality of service, we also do it, at lesser and lesser cost, so that the borrowers and the lenders both, get a better due. So I think these are the priorities. And for that, innovation is very important. Our focus has always been to keep a balance between innovation and stability, because they are kind of connected. And so we continue to promote and facilitate innovation, whether it is in AI, whether it is through fintechs, a number of different areas. We have the regulatory sandbox, as I mentioned to you, and our approach going forward will also be to facilitate innovation and come up with regulation only when we find that, it's best if businesses could continue, to do their work, and banks here, in our case, continue to do their work on their own without any rules or lesser of rules and regulations as possible, and to come in only when we feel that it is going to be a concern from a financial stability perspective, or it's going to be an issue from a customer conduct perspective.
Thank you, sir. Mr. Khurakiwala.
Very good morning to you, sir, and to everyone. My name is Habil Khurakiwala. We come from WOCAT, which is involved in research and innovation. So, and I think the theme of your talk and the conference is on the future and innovation, and how do we improve the operative working of financial system. My question is outside the financial system, the use of research and innovation. And if India, we all talk that we need innovation, and that is the quantum jump we will get in whatever we will do. But from the banking sector, which is very traditional and historical, there is no way a banking system values the innovation or a set of innovation or research, which is intellectual property. And there is no mechanism available in India or many parts, excepting venture capital, to fund this kind of intellectual property as a basis, because you fund the fixed asset, you fund the working capital, but there's no way one is able to fund the intellectual capital, which is really a driver and a multiplier of all other assets. Your comment.
I think past few years, we have seen a number of areas and a number of entities which have come up with funds and finances for such kind of innovation, research, and development. I think over the years, and I go back, to our times, when it was very, very difficult to actually find funders for a good, innovative project. I think now you have a large space, a large number of funds, mostly in the private sector, but some of them also supported by government, where they do support venture capitalists. And one finds that the number of startups, for example, in India are one of the highest. Number of unicorns that we have now, they are growing. More and more young people are taking up to innovation. I may mention that even banks, we have allowed the banks to invest in these alternative investment funds up to 20% for each fund, 10% for a regulated entity. So we are also supportive of investments in highly research-oriented and intellectual enterprises and intellect-driven enterprises. So while I must also say that while the ecosystem has improved, yes, there is more work to be done. We need, as an economy, to invest more and more in deep tech, intellectual property, and innovation.
Thank you. So may I request Mr. Somani for his question?
Good afternoon, sir. Thank you for an inspiring address. So many times there has been discussion on deepening the corporate bond market, widening it and deepening it. So my question is, sir, what are your thoughts on deepening it and widening it, particularly for smaller and mid-sized enterprises which may not have the AAA or the AA rating? Is there a roadmap to involve this part of smaller companies for this long-term capital? Thank you.
Yeah, I mean, ours is primarily a bank-led country, but one can see over the years the share of banking credit vis-a-vis total credit has decreased. NBFCs have come up to a great extent to fill up this space, and similarly corporate bonds. We are taking quite a few measures. I think all of us together are working together to improve the corporate bond market. I think, as and when information becomes more available and this asymmetry of information reduces, and for that, I think AI has a very big role. As and when, this progresses, I'm very confident that, as has been the case in many advanced nations, similarly even in India, corporate bonds will have a major presence in the Indian credit market.
Mr. Panda, your question.
Good morning, sir. And first, I'd like to commend you on a very good address to all of us. I think having heard you speak many times, what always stands out is your clarity of thought and the ability to communicate that effectively. Giving a little sort of an international flair to the questions which have been asked, my question is in the context of BRICS and specifically the scope for greater financial cooperation within the bloc. Do you think that the central banks of the BRICS nations can work, in jointly to, or will they work jointly to push more, cross-border payments and, local currency settlement? And in that, taking that a bit further, do you also see the scope for, greater cooperation on, bringing about interoperability of digital public infrastructure as well as, a common approach towards CBDC, the central bank digital currencies? And given that, India is chairing BRICS this year, at a personal level, what do you think, one could look at in terms of meaningful outcomes? Thank you.
Yeah, so very timely question. I am heading for the BRICS meeting today to Jaipur. So thank you for that question. We have a BRICS task force on payments. Your question is, I think, twofold. One is on payments and the other one is on the use of local currencies for international trade. So we have a task force in BRICS for payments. Cross-border payments is an area of interest for all of us, including the BRICS, because we do feel that there is a lot of scope for reducing costs, especially for retail transactions, and increasing speed. I mean, look at UPI, for example. It's instantaneous. while you have to wait, for some hours, some days for your foreign remittances to take place. So there is a lot of work which is being done over there, and various methods, various options are on table, but it is still at discussion stage, including CBDC and linkages of fast payment systems. On the use of local currencies, I may mention that there are a number of countries with which we do trade in local currencies. Volumes are, of course, small. We need to expand that. We have now, recently, we have started doing MOUs with the central banks of countries so that we can spread more awareness amongst the importers and the exporters to use local currencies. We have 4 of them, UAE, I think UAE, Mauritius, Maldives, and Indonesia. And we are in the process of doing much more such MOUs. They have given us encouraging results, and we will continue our efforts to internationalize the rupee and promote the use of local currencies for cross-border payments and for trade, etc.
One last question, Mr. Uday Shankar.
Governor, thank you very much. I really enjoyed your address. I do not know much about banking, but the focus on the opportunities and risks that you detailed from AI for the financial services sector as a whole was very, very encouraging. Of course, I'm not surprised given your own personal background in computer science. You understand it better than most people. But an essential point that comes out of what you said is how do we deal with this problem? Because it will require a completely new generation of AI native talent to be embedded in the entire financial sector, both on the business side and on the regulatory side. If we don't have that, we'll neither be able to unlock the opportunities nor deal with the risks. Does the regulator, and do you have thoughts on that?
No, you are spot on, I think, and that's true, for any organization. It is made of people, right? So you need to have the right people, you need to have the right talent. And AI becoming so big in how, we are going to interact, how we are going to do things and do business, it's but natural that we invest in our talent. And so it will be upon all of us to keep expanding our talent pool. I think India stands well positioned in this regard. We have a very large educational system, which produces engineers and IT experts. A lot of them are now doing, courses in machine learning and AI. So, and similarly, the industry is also retraining and reskilling their own existing workforce. And we can see in terms of when one speaks to various IT companies and the GCCs, they are increasingly adopting AI and improving their talent base. I don't have any doubts that we should be able to leverage our human resources for the kind of opportunities that AI opens up for all of us.
Thank you so much, sir, for taking these questions and candidly responding to them. May I now invite Shri Atul Kumar Goel, Chief Executive IBA, for your concluding remarks.
Thank you very much, Madam Jyoti. Very good morning to all. Honorable Shri Sanjay Malhotra ji, Governor, Reserve Bank of India, Shri C.S. Shetty ji, Chairman IBA as well as the Chairman of the State Bank of India, Shri Anand Goenka, President FICCI, and the Vice Chairman of the RPG Group, Madam Jyoti, Director General FICCI, Sri Anant Sarup, Secretary General FICCI, and Sri Ruchir Goyal, MD and Senior Partner of the BCG, and distinguished guests, member from the banking and the corporate sector, and all the participants of the conference. I once again welcome all of you in the 2 days conference. Friends, we are about to conclude the inaugural session of the FIBAC 2026, which actually set the tone of the conference. The theme of the conference, winning in the AI era, the new playback for the Indian is the very quite relevant, interesting as contemporary. Over the last few years, we are listening to AI related uses, its implication, need for the AI governance, etc. Truly, the artificial intelligence is accelerating the transformation in the financial services across the world, shaping how financial institutions operate, how vendors scale the solution, and how the regulator safeguard prudential soundness, market stability, and the conduct of the business and the consumer protection. Considering the use of the AI, needless to state, financial service industry is embracing AI to the faster pace other than the sector of the economy also, and within the financial sector, the fintech company are moving too much fast to the, as far as the today's deliberation, the governor Saab has already told about the how to make the leverage of the AI, and he has spoken in his address also ki we have to change the mindset either from the institution side, either from the customer side also, and he has to advise about the what is the use of the AI, the credit delivery, cash flow based lending, the GST, the payment bill, another use of the how to improve the better customer service, right product to the right customer. He has also emphasized the use of the AI for the customer grievances also, and the also for the use of the AI to be made for the financial inclusion, reduce the operational cost as well as the help to detect the fraud also. This is the use the Governor Saab has advised in their the deliberation of the 2 days, and he has also touched about the whatever the done last year, the done by the regulator also, the financial stability as far as the customer centricity, ease of doing business, and how to reduce the cost. The guidelines for the project finance has been issued last year. The related party transaction he has touched the issued last year also, and pricing of the bulk deposit in time also recently issued by the Reserve Bank of India, and the foreign exchange related approvals. Last year, he has told about the acquisition finance, which was the agenda of the last year in the FIBAC only. The acquisition finance, the regulator has permitted, and the norms for the priority sector as far as the AIF guidelines has been issued. And he has told the use of the AI, there is a lot of potential available. He has touched about the UPI. The UPI, you all are aware, last month, more than 24 billion transaction has been done. And in terms of the value, also more than 29 trillion. And the value wise also, and he has talked about the use of the AI in the account aggregator, help the AI in the financial inclusion. And he has talked about the AI framework has already been issued by the Reserve Bank of India for the committee is there for the ethical and the responsible AIs. Mr. Sethi and Mr. Anand Goenza has touched the acknowledged the financial stability. The India is doing very good, and the Mr. Sethi has also touched about the customer service, how to improve the customer service, and most importantly, he has touched about the trust of the customer. Which we have to maintain. Mr. Goenka has touched the 4 point regarding the inflation is under control, the financial system is strong, liquidity, and the second point he has told the MSME borrower or the other borrower, they have the expiration, how to take the credit from the bank. The third is the residence, and fourth is the use of the AI. Mr. Ruchir, in his the deliberation, the geopolitics, he has talked about the cyber risks also, the ransom, the 17 times, although the governor has told in his last answer of the one of the question, the Indian banking sector is very strong as far as the cyber security is concerned. And then the in the period of the everybody has touched the regarding the geopolitical technique, but the financial system is very strong. The capital of the banking sector is very robust as on days. Profitability is increasing, and the NPA is less than 1.5% gross NPA and less than 0.5% the net NPA also. But in this period of the heightened external uncertainty arising of the trade traffic and the geopolitical tensions, India and our banking sector are showing the resilience and the stability against the overall vision of the country. Being the major financial intermediary of the economy, bank has to play key role for the as a driver of the growth. In my opinion, bank can be the anchor for the Viksit Bharat 2047 vision. Without that, I think it is very difficult to achieve whatever we have the vision from the developing country to the developed country. And at this point of time, India's banking sector has a unique opportunity to lead the next wave of the financial transformation. Its success will depend on the transformation of the today's position of the strength into the 2 decades of the sustained expansion also. And Mr. Ruchir has also given 3 points for the democracy, credit affordability, how to make the easy credit, then the unlock the productivity and the risk capable, building the risk capability beyond the credit. Before concluding of this session, although the formal vote of thanks will be proposed by the Goenka ji, also let me express our thanks to the Honorable Governor Sri Malhotra ji, who spared his valuable time for this event. And sir, you have given the guidance for the banking sector also how to improve the customer service as well as the other risks in the banking industries also. We also thank this opportunity to Sri Sethis, the chairman of the State Bank of India as well as the chairman of the IBA, who has guided us to developing the framework of this 2 days conference. Let me also extend the thanks to the Anand Goenka ji and Madam Jyoti Vij and the Anand Sarup also of the FICCI, who has put the lot of efforts right from the conceptualization of this annual event of the FICCI and IBA. We also thank this opportunity to express our thanks to the knowledge partner BCG for guiding us to develop overall contents of this conference. Sri Ruchir Goyal has provided an overview of the theme of the conference. Considerable research has gone into the report of this, which we have just released. I am sure the report could provide the further insight into the overall theme of the conference. We also thank all the participants who have registered for this event, and the number is quite